Welcome to Giving You More Than Numbers, CASS's business support podcast, your go-to resource for practical business advice and expert insights.
Thank you for that. I think that was really insightful, and hopefully you as the viewers have taken a little bit of the type of things that are identifying as cash flow problems. But now let's actually try and become a little bit more proactive. Let's try and see if there are tools available or tools that we can embrace that automate and help us understand our cash position, as opposed to having to plug loads of numbers into a spreadsheet and then realise that formulas don't work, or actually it's already out of date. And I think we're really well placed having Paul here from Xero, because they're one of the forefront leaders in this cloud space of making the tools work in real time. And I think that's the key. So, straight question, Paul, how does Xero help businesses track and improve cash flow?
Sure, and I'll start this off by a bit of... So Xero came to the UK from New Zealand 13 years ago, so I'm sure someone will correct me on that. And when they came, they were real disruptors in the UK because they introduced a certain feature of linking your bank account straight to our product. And this is where I think we really started to look at real-time visibility and snapshots of your business, where we can actually see what's coming in and going out of your bank at the same time. So that's where Xero's success came from, I'll probably say. But in terms of actually using Xero as a day-to-day tool, if you think you've got your day-to-day transactions coming directly through to Xero, we always serve up a fantastic dashboard to all our users, which anybody with any knowledge, anyone...
don't need to be a finance person to understand
exactly. That's what I'm trying to say.
Yeah.
You don't need to be that literate in terms of the finance world. Can understand. There's a section there about how much money's come into your business. There's a section there about how much money's gone out of your business, and it'll give you a bar graph of showing, is my money coming in more than what's going out?
Yep.
And that's all they want to see. Am I in a good position? So we really encourage people to look at that daily.
Yeah, no, absolutely it is. And I think just to sort of round out the piece on that Xero dashboard, it's in non-finance language, as Paul intimated. We talk about invoices and bills to pay. We don't talk about sales ledgers and purchase ledgers. It's all very non-finance people. So for those of you that are working in that Xero environment and managing everything yourself, you'll find it a lot easier to navigate your way through. So if we know that we've got this lovely dashboard and we can see cash in and cash out, we've got a little section that says, here's my sales invoices. And that gives us a breakdown between total amount that we're owed, but actually in red, it says these are overdue. And that's the first bit for me from a cash flow perspective. I need to have no red overdues. I don't mind red overdues on my bills to pay, because I'm in control. But what I am interested in is making sure that those bills, those invoices that are shown in red, are as low as possible. I think that would probably be a fair assessment.
Yeah.
And Louise, in terms of that day to day, I know you're on that digital journey with lots of your clients.
Yes.
For those that have made that leap into Xero, and let's caveat this, or equivalents, how have they found that insight in running their business?
One of my clients in particular, who has a heavy requirement to pay labour on a weekly basis, has found it a godsend. It's reduced the amount of funding she has to use via factoring invoice discounting, because she's got a better feel for it. There isn't a problem with factoring and invoice discounting. It just can be quite addictive if you don't control what you're utilising. And she's been able to use her reports on Xero to get a fuller understanding of what she really does need, and what, if she just makes a couple of phone calls, can get the money a little bit quicker.
Yeah, absolutely. And so we have this lovely dashboard that's presented when you log into Xero, and it's there by default. You can't bypass it. It's the first thing as a user you will be presented with, and depending on your level of access will depend on what you actually see on that front page. But as business owners, we are giving you access to view everything. And if your accountant that you're working with doesn't give you access to everything, ask the question why. You need to know what's going on in your business. But that's just a little aside. So we've spoken about the dashboard and we've spoken about there's my quick visual. If we dig a little bit deeper, what else can we find that's going to help us manage our cash flow?
Yeah, I should have added before, actually. So depending on the type of user and how you like to work, you're not forced to sit down and log into a computer. Everything is app driven as well. So just to be clear on that, if you are out and about and you do want to see a snapshot of your business, you can do that quite easily through the app as well. But within product itself, we as I say, we're huge advocates in terms of cash flow and reducing debtor days, but we've produced many other tools to help you manage cash flow. And one in particular I'd like to talk about is analytics.
Yeah.
So analytics is something we give free on all our products, and it's a forecasting cash flow tool that we give as part of the product, and it will give you 30 days transparency of what's to come. So basically it will look at your invoices, your bills, it will look at what historical trends in the past, and it will start to give you predictions of what your cash flow will look like in 30 days.
Yeah.
We do also have the option to go further ahead, so you can go up to 90 days. That's a small add-on to the product, but it's a valued tool.
Yeah, I would agree, and we, for all of our clients, try and push them to spend that extra little bit of money, because that 90-day forecast suddenly identifies the shortfall that is coming. Sometimes 30 days, I'm okay. But that longer term 90 days, which invariably will then take into account a VAT return or a corporation tax payment, you have that insight to identify a little bit earlier. It's a little bit harder if you go, no, 30 days is more than enough. Most businesses, 90 days, we find that's a plan. Anything beyond that is just a projection, and invariably by the time you get there, it's already changed. But 90 days tends to give us the most accurate time period.
And how well does this streamline in with other areas of the app stack that people might be using? I don't know if they're using Go Cardless, perhaps.
Yes. So I think we'll talk about how we can get people paid and how all that feeds in just a little while. I think where we want to be is try and look at, I think, how we can utilize Xero to both speed up getting documentation out to customers, how we can manage those bills coming in to give us that visibility. And then I think we'll naturally go and look at how we can get paid, the methods then that we can use, the automations that are afforded to us when you're using that cloud-based package, and ultimately then talk about some real world wins where they've adopted some of these payment methods.
Okay.
Got a couple of crackers for you.
Sounds
Crackers,
good.
we like crackers. So Louise, you kind of were almost there. Xero, there's some great automation tools, and Paul's alluded to just some for the actual insights, but that ability to get that invoice out to a customer as soon as we've completed the work, or if we're doing repeat work for them that's the same value every week or every month, how can we speed that process up?
Yeah.
And I think that's one that I'm keen to understand how your clients have embraced that, how Xero pitches itself, and then we'll see whether we can find some examples of how that's really transformed businesses.
Certainly personally in-house, most of my clients pay on a monthly direct debit, and we have completely automated 80% of our invoices. So they just happen in the night. I just walk in the morning and they've been sent. I have clients who also have regular recurring work that's done on a daily or a weekly basis, and we've set up similar templates with them. That's reduced the burden of getting the invoices out. And basically during the tax season time as well, so certain tax returns are completed where it's a one-off fee at the end of it. I was able to have a more junior member of staff because it was all set up, and they're sent out by email, and we have this magic pay now button, and that was it. The invoices are paid because the customers do it in one go.
That's it. And I think those repeating invoices are an absolute must for those that are billing out for regular services, regular fees that don't change. But where you do have the need to raise invoices. And I'm going to use a carpet fitter who's a client of ours. And if we just sort of work backwards and talk about a very, very simple workflow, he'll raise his quote in Xero, in his van, or in front of the client on his tablet, and in some cases his phone. The tablet works a bit better because it's a little bit bigger, and we all know what we're like with clumpy fingers. But he'll raise that quote. The quote can be accepted there and then. He can then go off, order his materials, in to do the fitting, raise the invoice in front of the client, and email it to them instantly.
Yeah.
And gone are the days of, I didn't get the invoice, because there's a little bit of a history that sits behind one of these invoices that says when it was sent, when it was opened, when it was read, have you chased, have you sent it again because I haven't received it. All of that history suddenly now exists behind that document. So in terms of speeding up invoicing, the fact that we can do it on the go, or we use the phrase on the fly, makes life really, really easy. And those repeating invoices, they're an absolute godsend, because you can raise them even if you have varying quantities, but the amount is fixed. You can still raise that as a repeating invoice, but literally have it as a draft document that you can amend to add in any extras or whatever, and then still approve and send. So we're a massive advocate of that repeating invoice.
I'd say one thing I come across quite a lot when I speak to small businesses is when I ask why they don't use Xero for invoicing, but they use it anyway, and then they've just putting them in manually. Yeah. I find that crazy. Is they find that they're not aware of how much customization is available with invoicing, because they just think, oh, it's just going to be a generic cloud-generated invoice template that I'm going to send out. I'm going to lose all my branding and all my terms and conditions. But what they don't realize is you can heavily customize these documents, even replicate what they've used historically. So that's fine. But then the second objection I always get is, well, sometimes we send out different types or different styles to different people. It's like, well, that's not a problem as well. You can have different templates, and you can have multiple invoice templates, and they're like, all right, one less reason why I shouldn't adopt. But there we go. That's just one thing that came across recently.
Yeah, and I think I've kind of intimated that the carpet fitter client of ours that will raise the quote, etc. Have you got any examples, Louise, where adopting a cloud-based system, Xero, because I know that you're very much down that line, has made a difference to a client's cash flow in the grand scheme? So not necessarily a little part of it, but has affected cash flow massively, and I'm going to hope in a positive way.
Well, I alluded earlier to the client that runs a cleaning company, where she's actually been able to reduce her reliance on external funding.
Yeah.
Because the invoices are raised as the girls go out to do the jobs. It's done automatically. The invoices in the customer's inbox as the job is done. Yeah. And the ability to have this pay now so that the invoice is paid quicker, it's just been revolutionary for her.
Yeah, and I genuinely think that the quicker we can get those customer invoices out, especially if you've negotiated those payment terms and we can get it right, we're going to get paid before we have to worry about paying against those costs.
And it's the tying it in as well, so that it can be automated against a credit card payment as well. It's not you having to wait for a check to be sent in the old days, or someone doing a bank transfer. It's just automatically happening.
Yeah. I think one thing that we haven't touched on, but I think is probably really useful at this point, is to say, probably about 18 months ago, Xero introduced credit limits within your customer record. And what that allows you then to do is, again, if they're starting to fall behind, the next time you try to raise an invoice, the system is going to advise that they are over their credit limit, reaching their credit limit, and actually, do you still want to raise an invoice? And that ties in nicely. If you're one of those businesses that is in perhaps quite a high risk, or your clients that you work with are in high risk areas, and you buy some form of insurance protection, the insurance companies that are protecting or securing your debt will give you a credit limit. And you need to make sure that's then in Xero, because actually anything beyond that is unprotected.
Yeah.
So again, just another little thing that Xero introduced that allows us to monitor if clients are falling behind, especially if you are growing and have a finance team, but you're out doing the selling as the business owner and you don't know whether they're still paying or not. It's easy to then to refuse that invoice.
Thanks for listening to Giving You More Than Numbers. Subscribe for more business insights from Team CASS.